Okay, yeah, I think we can start. Good morning, everyone, and welcome to this webinar today. It's good to have you online. Just to introduce myself, I'm JC Briones from the Consultant Relations team in London. Now, as we all know, biodiversity is increasingly seen as the next frontier of sustainable investing, not least because of its very close links with climate change. But I'm sure all of you and many investors out there have a lot of questions about this particular topic. How relevant is it really for investors? What can we actually do about it? How can we integrate this in our investment process? And ultimately, does it really matter? So now Robeco has dedicated a considerable amount of resources to this particular topic. And so we've assembled a panel of experts today to talk about this and shed a bit more light from different angles. So with us today, we actually have a pretty global panel of experts from Robeco, starting off with Roshila Kerai, who is our biodiversity specialist. She's based here in our London office. And joining her is Aaron Ream. He is one of the portfolio managers for our biodiversity equity strategy, and he joins us from our office in Zurich. And then joining us from Singapore is Laura Bosch-Ferte. She is the lead biodiversity engagement specialist for Robeco. Feel free to ask questions throughout. And if you're not asking questions, please go on mute to reduce the sound. But of course, you can ask questions via sending it via the chat function, or of course, you can also speak up if you want to. So let's kick off and let's maybe start this setting the scene first as to why biodiversity matters. Now, when people mention the word biodiversity, you immediately think of nature and the world around us. So maybe let's start with you, Roshila. Could you tell us what the current state of the natural world is and of biodiversity at the moment?
Sure. Thank you, JC, and good morning, good afternoon, maybe good evening, everyone. So if we could go to the first slide, please. So where are we today? As you can see in this slide, currently, based upon how we consume and how we live, we're consuming about 1.7 planets per year. And that's way more than what the ability of the planet is to replenish these resources. And this slide shows a lot of statistics about what the way we live and what that's led to. And so, for example, I'm not going to read all of them, but perhaps to highlight a few of them, we've managed to degrade 1/3 of all of our lands. 40% of the oceans have been disturbed. 1/4 of all species are threatened with extinction, and 80% of wastewater flows are discharged without treatment. So that's the current state of the planet and what our overconsumption has led to. And JC, if you can go to the next slide, please. And yet at the same time, we're completely dependent on these very resources that we're impacting. For example, 75% of crop types are dependent on animal pollination. So if these species goes risk, I imagine what that does to our ability to grow food. 4 billion people rely on nature for their medicines. I mentioned in the previous slide the rate of untreated wastewater discharges that we have, and yet 3 billion people live in areas of water shortages. So not only is less of water available, but it's increasingly becoming more polluted. And JC mentioned climate change, which has been high on our agenda for a long time. And we need the land and these oceans to sequester 60% of this greenhouse gas emissions that we currently have. And in summary, half of our global economy is dependent on these services that we get from nature. So that's where we are today in terms of the state of nature and the impact that we're having on it.
Well, thanks for that, Roshila. There are some stunning statistics there that you've shared with us, and it really just reflects how serious and urgent an issue biodiversity is. But I guess from the point of view of investment, since ultimately we're all part of the investment community here, how should we think about the relationship of biodiversity laws and the companies that we invest in?
Sure. So in the first slide, I talked about the impacts that we're having on nature. And in this slide here, you see the dependencies that we as an economy, as a society have on it. And if you go to the next slide, we could drill it down to what it means for individual companies. So yes, companies are dependent on the services and the ecosystems that nature provides. And that could be in different parts of their value chain. It could be in their direct operations, or it could be upstream in terms of maybe their sourcing. It could be the impacts that they have downstream. And all of these activities that companies undergo, they have an impact on the drivers of biodiversity loss. So these activities, in fact, impact the land and sea use changes, the overexploitation of resources, pollution, and climate change. Invasive species is also very, very important from a biodiversity loss perspective, but it's very difficult to attribute it to an individual company. So we generally focus on the other four drivers where we can connect it to business activities. So these activities are impacting the drivers of biodiversity loss. And through that, they're changing the quality and the quantity of nature and these services that we rely on.
Great. That's very insightful, Rashila. But as investors, we tend to look at both risks and opportunities. So when it comes to biodiversity, I wanted to bring in Aaron as the portfolio manager of our biodiversity equity strategy. Aaron, could you talk through some of the investment opportunities that would be linked to biodiversity?
Hi, JC. Morning all. JC, thanks for the question. It's a good one. Reversing the biodiversity threat by bending the curve of biodiversity loss is expected to create around $10 trillion of new business opportunities by 2030. And that's a well-known figure that's been disseminated around a lot of media and investment coverage. But the interesting thing is that some of those investment opportunities are rising from global action to protect and restore nature, and these are actually starting to rapidly emerge now. Unprecedented government investments and financial subsidies are being combined with enforcement of legislation, creating a multitude of incentives for innovative technologies and services to support the transition to a nature-positive world. Producers face growing scrutiny from both investors like us, but also consumers, also like us, over their biodiversity footprint and strategies, whilst their management teams also recognize the opportunity arising from premium pricing and loyalty gained through certified sustainable products. Biodiversity action is therefore creating through the cycle growth opportunities right now across the global economy. And there are, of course, many long-term drivers for the theme, but there are near-term structural drivers and opportunities too. For example, Biden's infrastructure bill is the single largest wildlife conservation investment in US history, with more than 25 billion tipped for natural infrastructure and habitat conservation projects. The Inflation Reduction Act allocated 369 billion to climate change and energy investments. But actually more interesting for us is almost 50% of global fossil fuel emission reduction pathways are dependent on nature-based pathways. And that will create further funding for biodiversity through green infrastructure. And furthermore, the EU's Green Deal will incentivize similar investments across Europe. And what we see in our investment universe is engineering firms now have project backlogs swelling to near record levels. And what we see is the funding will start to emerge as revenue growth as early as H2 this year. Commodities produced on deforested or degraded land will soon be banned from the EU market as well. Leading companies are on target to meet their deforestation pledges already this year, but laggards yet to trace their raw materials will no longer have access to the common market by 2025. So when we see Brazil's new government, which is further committed to the total elimination of deforestation by 2030, this will force companies to converge to best practice. In Brazil, water is also a big focus with the universalization of sanitation, which is rapidly improving river water quality, but also delivering growth opportunities for domestic water utility companies. And in contrast, forever chemicals, or PFAS, are a freshwater policy focus in the Western world. Infrastructure infrastructure treatment, industrial technologies, and environmental testing industries are already receiving a tailwind from increasingly stringent PFAS regulation and funding. And our analytical instrument investments in our fund seek to capitalize on the growing spend on environmental testing solutions. We also see a lot of changes for the consumer. 75% of millennials consider sustainability in their purchases, which represents a generational shift in sustainable choices. Specialist food retail stores targeting healthy and low impact diets are currently demonstrating resilience as traditional food retail consumers trade down in response to inflation. Consumers also rely on certification to help with their sustainable choices, creating ever-growing budgets for traceability technologies. And this can be seen in intelligent labeling, which is now bucking the negative volume trend in the broader packaging and labeling industry. And this altogether, with increasing amounts of traceability technologies, is allowing companies to disclose audited data for investors to assess biodiversity performance and its materiality. And this is bringing clarity and assurance, which are the foundations of greater capital allocation to the topic of biodiversity investing.
Right. Well, thanks, Aaron. It does sound like there's a broad opportunity set that's linked to biodiversity. Now, I wanted to stick with you and hear a bit more about how you actually bring all of that together within a strategy such as the one that you run.
Yeah, brilliant. I certainly can. So I co-manage the Robeco SAM biodiversity equity strategy. And if we go to the next slide, perhaps, this will give a sense of how we've approached looking at opportunities and are trying to identify them. So our thematic equities team at Robeco has been tasked to identify emerging sustainability investment opportunities across themes such as water, smart energy, and circular economy for over 20 years now. So applying our tried and tested approach to biodiversity was the logical next step. But before I go into detail about on our approach, it's I think important to understand how we apply our thematic lens to the challenge of biodiversity loss. So I think the starting point, as Rashila's already covered, is that nearly all human activity causes biodiversity loss, at least to some extent. So it became clear then that the biodiversity equity strategy needed to invest in companies which were competitively positioned in a world focused on reducing biodiversity loss. And this is the mindset that allows us to capitalize on pathways towards a nature positive economy. And so one of the key tasks for us, as with anyone looking at biodiversity investing, is to translate this insight into biodiversity investments. And it's actually not very straightforward. I think a number of people that we've spoken to, prospects, consultants, and peers, is that there's such a diverse set of potential investments that we needed a structured and replicable and robust approach to identify and target activities that contribute directly and meaningfully to biodiversity loss reduction. So to find biodiversity winners and future winners, we've focused on high impact activities such as agriculture, forestry, fishing, and aquaculture, which represent nearly 3/4 of species loss. So global action to prevent biodiversity loss is also causing rapid evolution in the competitive landscape, which I've been through in the prior slide. And this, more than anything, presents underappreciated competitive advantages. And we see this as a source of alpha generating opportunities. Many of these opportunities are focused in wildlife-friendly food and forestry systems, a sustainable blue economy, pollution prevention, treatment, and also green infrastructure, and enhanced product stewardship and traceability in consumer-facing sectors. And this connection is the nexus of biodiversity action and thematic investing. And we seek to invest in companies that sit at this nexus because it ensures a level of purity and focus demanded by investors. And purity, in our view, is essential in thematic investing. And perhaps we go to the next slide, where we are able to deep dive into some of the actual indicators and structure that we've used to construct our biodiversity investment universe. And I think it's important to remember that all companies in our biodiversity universe, which is our investment opportunity set for the biodiversity equity strategy, all of these companies are positioned to benefit from consumer, government, and corporate action to halt and reverse biodiversity loss. And so to capture this, we have created eligibility criteria, and we actually use a combination of metrics. But we tend to focus on companies that sell products that either reduce threats to or support restoration of biodiversity, or have products that are sustainably produced and recognized by certification, or are sustainably sourced with certified inputs, commitments, and verification. But given the lack of available data, we've opted to use our own proprietary set of KPIs for assessing corporate biodiversity alignment. And we've constructed these based on a deep understanding of the drivers of biodiversity loss and also the competitive forces that these companies face. So what we want to do is not just to have our KPIs, but also design it to be future-proof. So not only does it use our KPIs, but it's also designed to embed upcoming taxonomy releases and corporate disclosures as they emerge. And what I think is most important here is that we've embedded some of the taxonomy thought and process here with transition, own performance, and enabling. And these categories are now embedded into our investment universe. And this gives us the opportunity to benefit from investment opportunities in the transition as well as the biodiversity solutions area. And so to just give you a sense of the types of businesses that you might find, for example, in the enabling activities, these are typically around threat reduction, but also positive biodiversity outcomes. And these are sort of the intuitive biodiversity investments. So companies are offering water treatment that reduce the threat of pollutants that pose threats to freshwater wildlife, or indeed wetland restoration that allows species to return safely to the natural habitats. Also in the procedure, what we're really interested in there are organic and sustainable food production, but also forestry and other areas of the economy. And these are the companies that can reduce threats to biodiversity through lower impact production processes. And these companies set best practice standards for traditional food systems, companies, and so fall within the own performance category. And the final one within this structure are those multinational companies downstream in high biodiversity dependent value chains that have an essential role to play as they close the gap to best practice. Companies, particularly with significant quantities of deforestation and habitat conversion risk commodities in their supply chain. We think about palm oil, cocoa, coffee, soy, and we select these companies typically in consumer staples, discretionary and material sectors that have high levels of certification, biodiversity targets, and clear pathways to achieving their commitments. And we have brought all of this together to construct a dedicated biodiversity universe. And I think as part of that, typically in this transition activities is where we focus our engagement program. And that's really a very important part of our investment strategy.
Great, thanks, Aaron. And we'll definitely get to engagement in just a bit. But obviously, a lot of thought and work has gone into the investment framework for this specific strategy. But I wondered, Rashila, in your work, how have we been able to leverage the work that was put in developing biodiversity equities as a standalone strategy into something that can be used across the firm, across different asset classes, to help integrate biodiversity into our investment process?
Sure. Thanks, JC. So yes, learning from the work that has gone into the development of this product, we've been thinking about how we can look at assessing the impacts all companies in all industries have on the drivers of biodiversity loss and how we could have a view on those more expansively than for, let's say, one individual product where we're looking at defining the investable universe and investment decisions. So if you go to the next slide, I'd like to share with you the process that we have or what our investment framework looks like. So, and Aaron touched on some of these points, but what we're really looking at is how companies are interacting with the drivers of biodiversity loss, because as I mentioned in that impacts and dependency slides, this is then affecting the quality and the quantity of nature that we depend on. So we start with what are the drivers of biodiversity loss, and at a sectoral level, how these sectors are, what their footprint is in terms of connecting to these drivers of biodiversity loss. So that's what we call our step one. And for that, we do rely on third-party data that provides us this footprinting approach. And the reason for that is with this footprint, we do want to look at the value chain of a company and not just focus on the direct operations, but it also gives us insights in terms of what are the main drivers of biodiversity loss, or where in the value chain are they occurring. So that sets our starting point. Is it very high? Is it very less high, medium, low? And then we look at, for an individual company, just like Aaron explained, what is it that these companies are making and how are they producing them? So what are these product attributes and connecting to the main drivers of biodiversity loss? And then how are they operating? Are they setting targets? What are their sourcing practices? Do they have a proactive approach towards commitments to biodiversity restoration, for example? So we go through this three-step process to assess companies' contribution to halting and reversing the drivers of biodiversity loss. And then if you go to the next slide, please.
Yeah.
So this three-step process then is what is their response at a company level to the drivers of biodiversity loss? How well are they relieving that pressure on those drivers or maintaining that pressure? And we come up with a scoring system to help us assess and at the end of the day to really just differentiate between leaders and laggards. So what you see here is a scoring system that goes from -3 to +3. And the starting point, the sectoral starting point, will be -3 to at best neutral because there is no sector that has a positive contribution to the drivers of biodiversity loss today, right? So you have a negative starting point for all of them, but you can have companies through the choices that they make on what products to produce and put out into the market that responds to these drivers, or how they choose to produce those products through their activities and commitments, and then that moves them up through the scoring system to then really allow us to see who are really leading the way and benefiting from the trends and opportunities and challenges that Aaron outlined for us, or those that are just lagging and not doing anything about it. So in a nutshell, that's our thinking and our approach to how we're developing our biodiversity investment framework. It is currently still under development. We're finalizing it right now. We've mapped out the sector starting points. We've got the KPIs and we're tweaking them right now and hoping to put it into production very shortly.
Just
Thanks.
sticking with you. Thanks, Rashilla. That's really interesting and pioneering stuff that's coming out of your team. But I was just curious to find out if we're also trying to validate this approach with any external parties or independent experts on this. I know a few years ago we mentioned our partnership with WWF in the Netherlands. Have they played any role in this initiative?
Very much so. And actually, our partnership with WWF in the Netherlands has been really helpful for us to think through how we look at this, and they've been great in terms of helping us. So we sent them all of our KPIs. We've sent them our ideas on how we want to look at this at specific industry level. They've been great about connecting us with their experts. So whether it be their mining expert, their food expert, their freshwater expert, to give us that very critical feedback on our approach and challenging us, quite frankly, in terms of whether it is robust or whether it is picking up the things that we want to see. And with that feedback, then we've been able to tweak and adjust and bring it into our process so we can ensure that we have a rigorous and a credible approach to how we look at companies and the impact that they're having on nature.
Great. And then in terms of metrics, when we talk about climate change, we talk about scope 1, 2, and 3, and we talk about how the quality of data is improving over time. Now, for biodiversity, what are your observations in terms of, one, the availability of data, and second, the quality of the data that's available?
Yeah, and this is the point that Aaron made, that the methodology, the KPIs that we're using in the fund and the KPIs that we're using in our framework are developed with our in-house knowledge, with the experts that we have, the industry experts, both in SI as well as in the investment teams. that we know these industries, and then we're able to have KPIs to capture the drivers of biodiversity loss. And the reason that we've gone with doing it in-house is because the data is not yet there to capture what we want to capture for how we want to look at investment decisions. There has been a massive explosion in attention from different data providers, new companies popping up that are trying to help us tackle this problem. Company disclosures will improve. The TNFD and other initiatives will help drive that and improve corporate disclosures, but it's not there today. And quite frankly, we're not going to wait until we have better data. We have enough data to start with now. The third-party data that we use that comes from Iceberg gives us the starting point of where to look at and what to look at, and then we can complement that with our in-house knowledge.
Great, thanks for that, Rashila. Now, I think we have a question in the chat as well. How long do you think it will take for data to catch up?
I think it'll take a few years before we have, so the TNFD, Task Force for Nature-Related Financial Disclosures, follows the logic of the TCFD. That is coming out in September, where that'll be the first point that companies can really see the final final recommendations of how to disclose on nature-related risks and opportunities, impacts, and dependencies. So it'll start next year at the earliest, but as we've seen with climate, it takes a while we're all learning, and as we do these disclosures, we'll learn more. So it'll take some time before we get fully TNFD aligned disclosures. Quite frankly, we're never going to have perfect data. We're never going to have exactly what we want from every single company and what we're looking at. But today we have enough information to start working with. Aaron also mentioned the methodology that we have. We've built it in a way that's future-proof. So as we learn more and as disclosures improve, we can certainly adapt and bring it into our framework, into our investment decisions. So we can't wait for perfect data because it will never come. And we see that with climate as well, right? I mean, we've been tackling that for a long time, and yet it's still not quite where we want it. But we have enough knowledge to start in a very credible way, I'd say.
Great, thanks for that, Rashila. Now, Aaron alluded to engagement a while ago as an important element when it comes to an investment approach to biodiversity. So I want to bring Laura into the discussion. Laura, could you talk us through what we're doing in terms of engagement that's related to biodiversity?
Hi, JC. Indeed, I can briefly comment on that. So for us, it's really important to use our leverage as shareholders and bondholders to really nudge companies to improve their sustainability practices. And the topic of biodiversity is certainly an important one to address. So we've been actually engaging on this issue for a number of years. So I think it's been almost like 8 to 9 years since we started engaging with the consumer goods sector on topics related to their environmental footprint. But only in 2019, we sort of formalized our approach to engaging on nature and started more dedicated engagement programs around this topic. So we actually engage both with corporates, but also with sovereigns on the topic of how they manage biodiversity laws. So on the corporate side, we look mainly at companies in consumer staples, consumer discretionary, and materials. And there we have different engagement programs looking into different engagement priorities. So on the collaborative side, we are actually actively involved in Nature Action 100, which is an initiative that will be launched throughout this summer. And it basically looks into replicating the Climate Action 100 work, but focusing on nature. So a group of investors will be targeting those 100 companies that have the highest negative impact on nature loss. We're part of the advisory committee of that initiative. But beyond that, we also do quite some bilateral engagement with companies as well. So back in 2020, we launched a dedicated engagement theme looking into biodiversity loss. And there we engage with companies looking at their biodiversity strategy, how do they look at that topic from a governance perspective, and how they integrate nature-related considerations in their decision-making process. We also encourage companies to assess the impacts and dependencies that they have on nature. We discuss what are their conservation and restoration targets and how they try to minimize their negative biodiversity footprint that they can have. And finally, we also encourage them to enhance the disclosures around these topics. So just to give you an example on our biodiversity loss engagement work, a company that we've been talking to in the tire manufacturing industry, Michelin, which is also part of the Biodiversity Equity Fund, there we talk with the company about their impact assessment of their biodiversity footprint. How are they trying to minimize their exposure to deforestation risks through the sourcing of natural rubber, which is a key soft commodity needed for producing tires. And we've also been talking with the company about how they are trying to make their production process more circular and reuse part of the tires that are, produced to sort of, repurpose those for producing new tires as a way to reduce the dependency on sourcing new natural rubber. So for the corporate engagement, we also have an active program on the topic of palm oil, where we encourage companies to embrace more sustainable practices when it comes to sourcing the palm oil from producers. So there we look at, for example, the certification of the volumes of palm oils that companies source. And there we specifically look at the RSPO as a leading practice. So all these corporate engagements are actually, work that we do in collaboration with external stakeholders as well. So we rely heavily with WWF to get their input on how to best approach some of these topics. And we also collaborate actively with RSPO, and we are a member of RSPO as well, and sort of coordinating the actions within the financial sector and how to strive for a more sustainable palm oil industry. And needless to say, all this corporate engagement work that we do, we collaborate very closely with the PMs and the colleagues in the investment teams. So for the cases that we run on behalf of the biodiversity equity strategy, we work very closely with Aaron, Reem, and David Thomas, the co-PMs of the strategy, to make sure that all the insights that we gain through engagement are properly reflected also in the investment view that we have on the companies. And finally, we also have sovereign engagement, meaning that we actually talk to governments on their policy developments around the topic of nature laws, and more specifically deforestation. So we've prioritized their countries with high ecological value and high risk of deforestation rates going up. So we've been engaging with the government of Brazil and Indonesia through a collaborative engagement platform called the Investor Policy Dialogue on Deforestation. We're actually co-chairing the working group that we have for the Indonesian dialogues. And that's also a very meaningful way of trying to create a level playing field in those producing countries to improve the overall policy landscape on the topic of biodiversity. And if we can move to the next slide, just to make all this information about their engagement work a bit more tangible, let me pull up a concrete example of Leroy Seafoods. So the company is a producer of salmon in the aquaculture sector. It's based in Norway. And aquaculture, especially on the salmon producing side, is actually a very efficient way of producing animal protein, as we need fewer resources to actually generate those proteins compared to beef or cattle. So even though it's a very efficient way of approaching the food industry, there are quite some biodiversity challenges challenges attached to it, looking into the feed and the chemical inputs that are used for raising the salmon and having it ready to sell to the market. So actually, we started engaging with Leroy Seafood earlier last year, and there we actually focused our engagement on their biodiversity risk assessment of their own operations, and also of the ingredients that they use as feed for basically providing it to the fish that they grow. We've also looked at the topic of certifications and how they can actually increase the percentage of volumes that are certified against a couple of leading standards in the industry. And finally, another engagement point with this company has been how they talk to their own suppliers, especially for those that they source the feed from, in terms of minimizing the negative impact that they might have on land use change, as also part of the feed ingredients relate to soy production, and soy is highly linked to deforestation risks in South America. So just to wrap up this example, we had a first call with the company. We spoke to the CFO earlier this year, and there we had a thorough discussion of the sustainability ambitions of the company, how the company is sort of approaching some regulatory developments in Norway and more broadly in the EU, and how that can also advance the broader work that the company is doing on integrating nature-related risks in their decision-making process. And we also talked about disclosures and how TNFD can be a useful framework for the company to start bringing more transparency into how they look at nature. And with that, I'll hand it back to you, JC.
No, thanks for that, Laura. That was a great look into the work that goes as far as biodiversity and active ownership are concerned. We have a few minutes left, so I wanted to open it up for any questions from those of you who are dialed into the call. Any questions from the audience? You can send it via chat, or you can also feel free to unmute yourselves. Okay, doesn't look like we have additional questions. It's obviously a very broad and dense topic, and hopefully this webinar has sparked a few ideas and thoughts from all of you listening in today, and we'd be really happy to continue the conversation with all of you. Please feel free to get in touch with your usual Robeco representative to continue the conversation, and then happy to share more details and information on the work that we're doing as far as biodiversity is concerned. Thanks everyone again for attending, and have a great day.